Today, we're going to talk about the top 5 high-interest savings accounts of 2024 that can help you maximize your savings. Let's dive right in. At number 5, we have the Everbank Performance Savings, known for its excellent customer service. Everbank offers a competitive APY of 2.5%. The best part, no minimum balance requirement and no monthly fees. Coming in at number 4 is UFB Secure Savings, with an impressive API of 2.75%. UFB Bank also offers a user-friendly mobile app to manage your savings on the go. At number 3, we have Tab Bank, high-yield savings offering a whopping 3% APY. Tab Bank has made a name for itself in the high-yield savings space, plus they offer free checks and ATM access. Runner-up at number 2 is Capital One 360 with an APY of 4.25%. Capital One 360 stands out with its robust online banking platform and 24/7 customer support. And finally, at number 1, we have Brio Direct High Yield Savings Account offering an unbeatable APY of 4.5%. Brio Direct Bank leads the pack in 2024. They offer unlimited withdrawals and no monthly fees. And here are some tips on how to choose the right savings account. Number 1, understand your needs. Determine what you need from a savings account. Do you want easy access to your money, or are you looking for a long-term savings option? Number 2, compare interest rates. Look for accounts with high interest rates. The higher the interest rate, the more money you'll earn from your savings. Number 3, check for fees. Some banks charge monthly maintenance fees, withdrawal fees, or require a minimum balance. Make sure to read the fine print. Number 4, consider accessibility. Consider how easy it is to deposit and withdraw money. Can you do it online, or do you need to visit a branch? Number 5, look at additional features. Some accounts offer additional features like automatic savings programs, bonuses for saving certain amounts, or budgeting tools. Number 6, financial institutions' reputation. Look at the reputation of the financial institution. Check online reviews and ratings for customer service and reliability. Remember, the best savings account for you depends on your personal financial goals and needs. It's always a good idea to do your research and compare options before making a decision, and let's focus on some pros and cons of high-interest savings account. Pros. Number 1, higher returns. High-interest savings accounts offer higher interest rates compared to regular savings accounts, which means your money grows faster. Number 2, compounding interest. The interest you earn is added to your balance, and then that combined amount earns interest. Over time, this compounding effect can lead to significant growth of your savings. Number 3, liquidity. Unlike some other investment options, the money in a high-interest savings account is easily accessible, which is great for emergency funds. Cons. Number 1, minimum balance requirements. Some high-interest savings accounts require you to maintain a minimum balance to earn the high rate. Number 2, limited transactions. Savings accounts often limit the number of free withdrawals or transactions you can make each month. Number 3, inflation risk. While the returns on high-interest savings accounts are higher than regular accounts, they may not always keep up with inflation. Remember, it's important to do your research and choose a savings account that fits your financial goals and needs. Here are the main differences between a savings account and a checking account. Savings account. Number 1, purpose. A savings account is intended for money that you don't need to access frequently. It's a place to save money for a specific goal or a rainy day. Number 2, interest. Savings accounts typically earn interest, helping your money grow over time. Number 3, transactions. There's usually a limit on the number of transactions you can make each month with a savings account. Checking account. Number 1, purpose. A checking account is designed for frequent use. It's where you keep the money that you plan to use for daily expenses. Number 2, interest. Checking accounts usually don't earn much, if any, interest. Number 3, transactions. You can typically make as many deposits and withdrawals as you want with a checking account. Remember, it's important to have both types of accounts as they serve different purposes. Your checking account is for everyday transactions, while your savings account is for building up savings over time. And here are some tips to help you maximize your savings. Number 1, set a budget. Determine your income and expenses and set a budget to manage your money effectively. Try to save a certain percentage of your income every month. Number 2, automatic transfers. Set up automatic transfers to your savings account. This way, you're saving money without even thinking about it. Number 3, high-interest savings account. Choose a savings account that offers a high interest rate. This will allow your money to grow faster. Number 4, limit withdrawals. Try to limit the number of withdrawals you make from your savings account. The more money you leave in the account, the more interest you'll earn. Number 5, emergency fund. Aim to have an emergency fund that can cover at least 3 to 6 months' worth of living expenses. This can give you peace of mind and reduce the need to dip into your savings. Number 6, save windfalls. Whenever you receive unexpected money, such as a tax refund or a gift, consider putting it directly into your savings account. Number 7, review and adjust. Regularly review your savings goals and adjust your savings strategies as needed. This can help you stay on track and maximize your savings. Remember, the key to saving is consistency. Even small amounts can add up over time, and it's always a good idea to shop around and compare different savings accounts to find one that suits your needs. Factors to consider include the interest rate, minimum balance requirements fees, and the reputation of the financial institution. And it's always a good idea to read the terms and conditions carefully. Before opening an account, you might also want to consult with a financial advisor to make sure you're making the best decision for your personal financial situation. Happy saving!